Hello. So this is going to be a basic run through of a trade I took today, based on quarterly theory and just some basic ICT concepts of order flow and some kind of, price delivery array. It's mostly targeted towards the quarterly theory though, which is part of the main kind of strategy that I do trade. So I took this trade earlier this morning on Euro USD. I'm on the UTC -5, which is the New York time frame, keeping in mind daylight savings. And this was based around, like I said, quarterly theory and time-based PD arrays. So the idea is that during the manipulation quarter, obviously time is divided into 4 quarters, although I don't have that quarter saved now, but basically imagine that, these are 4 quarters in a single session, the session being London, which is what I trade. So imagine these as 4 quarters. Now actually I just need one more. There we go. So how this works is that price would follow the power of 3 movement within these 4 quarters. The first being the accumulation phase, in which price will basically just consolidate and do some wacky movements. The next quarter, obviously, depending on your overall higher time frame bias, which is bearish for today, as you can see, prices going down. You would expect a manipulation towards towards buy side, and then you would expect some kind of entry during the third quarter, which is the distribution quarter, and then some kind of reversal or continuation in the last quarter. Now, the important thing to note here is that you wouldn't just want price to sweep into some random direction, but instead you would like price to enter a price delivery array, or just a PD array to call it, which could be some kind of fair value gap, breaker block, or whatever you want to know. In this case, this would be a inverted fair value gap, but it's important to note that this fair value gap has to form from some kind of previous historic manipulation quarter. Obviously this being the accumulation, which I'll denote with an A, the manipulation quarter with a B, a distribution quarter with a D, and the reversal or continuation quarter with an X. This is called the AMDX pattern, following Day's quarterly theory. So in the manipulation quarter, you would want a PD array that formed inside a manipulation quarter to be kind of entered, and then you would base your entry around that. So you would enter and you'd kind of target some lower liquidity or PD array down below. So if I just remove these for now, so I could kind of show this and how I did this in real time on the real charts. Just remove these. Okay, so this morning I'm using this indicator called quarterly cycles, which is basically kind of simplifies drawing out these quarters. The dashed box is kind of indicating the London session, and within the London session you'll get 4 boxes like Asia, the grey one being the accumulation or continuation, the in this case the accumulation, manipulation, distribution. As you can see, in London, price was accumulating, which makes sense, but this is all inside of the Asian range. So I draw the Asian range, just the highs and the lows like this, draw out the Asian high and the Asian low, just for reference, to make sure we're not doing something weird. And then what I would do is I go back in time, maybe on like a 15-minute or a 1 hour, and I try to find a PD array like this one, or this breaker block. I think this was a 30-minute breaker block that formed inside the manipulation quarter, which is this red box. And if you go back in time enough, you'll see that this one formed in a manipulation quarter. So we know that we're bearish, so we would like to kind of my incentive was that we'd like to go into this area to go lower and kind of target a more discounted zone to buy this area over here, because we have some unmitigated fair value gaps and liquidity resting below. So in that case, you would only want to sell if the manipulation is towards the buy side. So if I just kind of speed up time a bit here, you notice that in the manipulation time, which starts at 1:30 New York time, we move inside this kind of breaker block, order block area. And if I just speed time ahead now, you notice that on the 1 minute, we have this inversion fair value gap. And if you take this inversion fair value gap after price entered this point of interest, like this, that would give you a clear indication that price broke through that, disrespected it multiple times, and this would be a good place to enter. So the exact place I entered was around there, with this area, with my stop above, and I targeted the this liquidity area down below, which is past the Asian lows, but it's still a major liquidity area with equal lows that I would like to be swept, and you could even extend it all the way down to this area, which is a very extended low, which I'll probably only do partials with. So what I did is I took 75% of my profits from this area. So just let price run. I took 75% of my profits off of this area, and I let the rest run down to this extreme kind of time-based liquidity down below. So as you can see, price kind of hung around and, you know, went about its thing during the London quarter, and then during the continuation quarter, price just continued sweeping downwards, and eventually it hit my take profit. So it's just a matter of being patient and just waiting and trusting in the setup. There we go. So my TP was set right there. So this was a 1 to 10 trade, risking 1% on account. This would pass you almost most prop firm challenges, and it's just based around the idea that price would accumulate. This is a beautiful example. Price accumulated and then manipulated upwards into a time-based PD array, like an order block, a breaker block, a fair value gap, and then you'd like to see displacement in the opposite direction. Now, since I was biased towards sells today, the moment I saw this inverted fair value gap form, I knew that rejection was being, you know, there was some kind of rejection towards this area, and, you know, just entering a market entry, throwing in, you know, 1% of your risk and just letting it ride all the way down to your take profit, which was this liquidity area. So that's basically how I took this trade, and just to kind of the sell that I took, and this was my profits. So it was a real trade. Took it this morning, easy to follow, just with the power 3 and quarterly theory.